Bitcoin is on track to hit $10 trillion in market capitalization, according to macro investor and Real Vision CEO Raoul Pal. In this video, Pal explains why he believes Bitcoin is poised for a massive breakout in the coming years. He discusses the key factors that will drive adoption, including the approval of a Bitcoin spot ETF, the growing interest from institutional investors, and the increasing demand for Bitcoin as a store of value. Pal also warns that regulation could be a headwind for Bitcoin in the short term, but he believes that the long-term outlook is bright. He argues that the UK is the most likely country to become a global crypto hub, and that London is well-positioned to attract investment and innovation from around the world. If you're interested in learning more about Pal's bullish Bitcoin prediction, be sure to watch this video. He provides a detailed and insightful analysis of the Bitcoin market, and he shares his thoughts on how investors can position themselves for the next bull run. Subscribe to my channel for more insights into the future of Bitcoin and the crypto market.
Obviously, Fidelity have been pioneers, Franklin Templeton have been pioneers. So they're all ready, and it seems that it has been decided that, I think Gary Gensler, to take some political heat, has said, fine, I'll approve a Bitcoin spot ETF. And I think, BlackRock being the benchmark name to come into it has helped tremendously. And I think we'll get an ETH spot ETF as well. Because he needs to be somewhat conciliatory because he's screwed up so badly in what he's done so far. So I think he'll take some political pressure saying, I'm not trying to stop the space, I'm just trying to regulate it. And look, BlackRock are now in the space and we're in safer hands, isn't that amazing? So, I think that's how it goes. And that also helps because that's going to bring in the RIA networks and others, give them something they understand, which is an equity that they can put into a regular portfolio. But this equity has the kind of exponential upside that crypto has without the complications of the futures ETFs that just don't reflect the underlying. If you'd have launched a Bitcoin ETF in October of last year, you would have had 0 buyers. So it's a matter of price. So the moment the narrative starts picking up and the liquidity comes back and people have got some money to invest again, look, nobody's got any money right now. Everybody's skint. Everyone's had a tough time. It's got no recycled gains because everything's below all-time highs. But once that starts happening, money will flow in. So let's assume January happens. Well, usually by this stage in the crypto markets, we should start hitting crypto summer by summer of next year, from sometime after about April. And I think that means that now the channel is open and people can take money in. So as you rightly say, there's a lag because the markets aren't, the market narrative isn't ready to bring in billions and billions of dollars. But if crypto does its crypto thing, and by kind of Q2, Q3 of 2024, the markets are starting to rip, interest rates are coming down, liquidity's in the system, people are making money. Oh yeah, we'll see, tens of billions of dollars coming into this. Bitcoin did 3x its previous all-time high in the last cycle. Does it do that? Somewhat less because, as you get more maturity, maybe it does less. ETH? Well, maybe ETH does 3 times its all-time high like Bitcoin did in the last cycle. So that's kind of how I'm thinking about it. It's versus all-time highs. I think the space probably ends up, in the end, closer to a $10 trillion asset class than it is $1 trillion today. So is there a 10x from the space? Possible. Is it a 5x instead? Maybe. But, I don't really think in terms of where it gets to in price. It gets to where it gets to. You just need to be in it for the ride.
The intrigue around cryptocurrency ETFs, as Raoul discusses, isn't merely about their approval, but also intertwines with the technicalities of price, investment flows, and the persistent volatility that is synonymous with crypto markets. His points about Bitcoin and ETH and his cautious avoidance of deterministic price predictions reflect the unpredictable nature of these digital assets. Raoul proposes the potential of the crypto space to burgeon into a $10 trillion asset class, shedding light on the phenomenal growth awaiting on the horizon. Raoul proposes the potential of the crypto space to burgeon into a $10 trillion asset class, shedding light on the phenomenal growth awaiting on the horizon. In order to reach such a pinnacle, the market doesn't merely require a financial infusion, but an astute, regulatory and infrastructural evolution to maintain stability amidst expansive growth. It prompts us to question how this metamorphosis will transpire, especially with looming regulatory decisions and technological advancements.
Overall, crypto regulation, look, it seems to be political for some unknown reason right now, and nobody really understands why that is. Why has it become, maybe it's about the fragility of the financial system itself that is what they're trying to protect here. But what I do know is we've seen the US make these mistakes a few times in the past. So after the US came off the gold standard back in the 70s, they had a restricted capital controls because they wanted to protect the dollar. There was these free-floating currencies. Nobody knew how it worked. So the UK said, well, people need to exchange between currencies, and they started the global FX market, became the biggest market the world's ever seen. Mm-hmm. Then the US became protective over its banking system and said, well, we don't want to be the lenders all the time. We don't want to be involved in international lending, and they restricted lending. The UK set up the Eurodollar market, became the largest market the world has ever seen, which is the offshore borrowing and lending of US dollars. The next part of that became in the late 80s, the derivative market started. The US had a stranglehold on futures and options, but OTC derivatives started with swaps, and then other stuff started. And the US banking regulation didn't allow them on the balance sheet, so they restricted regulatory capital. So the UK changed the rules, as did the EU, and the swaps market started, and the $1.4 quadrillion derivative market came out of the UK. So if we step and look at this, here's the US stumbling again over protecting its own banking system and financial system and its dollar supremacy. The UK is the most likely disruptor. And if I grew up in the UK in the 90s, that wave was all the US investment banks and US asset management firms based in London. Goldman's main office was London, not New York. Now the headquarters is New York, and they're listed in New York. So if the US screws this up, Coinbase's main office will be in London, as will A16Z crypto, as will everybody, and London will create the regulation required to make it global. And London has the trade linkages with Singapore, Hong Kong, the EU, Switzerland, the Middle East, and that whole architect, and the Cayman Islands, which is where most of the funds are based. So that whole architecture is already in place for the UK. So the US has a history of screwing these things up or dragging its heels, but somebody else will take it. If everyone sees $1 trillion market and the US is fumbling the ball, they'll take it.
In Bitcoin and the crypto market are on the cusp of a major breakout. The approval of a Bitcoin spot ETF, the growing interest from institutional investors, and the increasing demand for Bitcoin as a store of value are all signs that Bitcoin is poised to reach new heights in the coming years. While there are some short-term headwinds, such as regulation, the long-term outlook for Bitcoin is extremely bullish. If Bitcoin can follow a similar price trajectory to the one it saw during the previous bull cycle, we could see a 10x or even 100x return on investment in the next few years. If you're interested in investing in Bitcoin, now is the time to do it. The market is still in its early stages of adoption, and there is still a lot of upside potential. Just be sure to do your own research and invest only what you can afford to lose. Subscribe to my channel for more insights into the future of Bitcoin and the crypto market. I'll be covering the latest news and developments, as well as providing my own analysis and predictions. I hope you enjoyed this video. If you did, please hit the like button and subscribe to my channel. Thanks for watching.